Hello, I'm Chris Sarley, Investment Research Analyst at FundCalibre, and today I'm delighted to be joined by Anjli Shah, Manager of the ASI Global Midcap Fund. Anjli, thank you for joining us today.
Hello, nice to see you.
Obviously, the fund was launched in April 2020. Perhaps not the easiest time for mid-sized companies around the world. Could you maybe give us a bit of an insight about how that sort of came about and the early experiences?
Sure. So the fund actually turned 1 year old in late April this year, and I'm happy to report that the fund has delivered strong absolute performance, has modestly outperformed the benchmark, and is also significantly ahead of large caps. So the performance is in line with our expectations and in line with the other funds run by our team. Now, I have to say, when we were thinking of launching the fund back in April 2020, some people were left scratching their heads as to why we were launching a mid-cap fund during what looked like a very challenging and confusing period for all of us. But actually, we thought it was a really good time to launch a fund. And this is because while the economy felt like it was collapsing, stock markets had actually already bottomed out in late March. So in other words, stock markets had already looked through the pandemic and were already in recovery mode. So that really allowed us to make a strong absolute start. And one thing we know about the pandemic is that, unfortunately, it's not impacted all sectors and companies equally. So mid-caps operating in highly cyclical areas like travel and leisure were the most adversely impacted, whereas those mid-caps who were operating in areas of structural growth saw long-term trends accelerating further, so they fared much better. The fact that we didn't actually have a vaccine at that point as well meant that our investment style, which focuses on investing in high quality companies, did particularly well, as we had companies that could really thrive during the pandemic. So for example, we own a Hong Kong listed company called Tektronic. Some of you may be familiar with their power tool brands like Ryobi, Milwaukee, or Vax. And this is a company that's really done well during the pandemic, not just because of the fact that we've all been paying a much more attention to home improvement trends, but also because its competitors, which had really poor balance sheets, weren't able to continue investing in new products, whereas Tektronic continued to invest very strongly in research and development, so continuing to launch new products and gain market share. And I have to say, our fund's strongest performance actually came during the most challenging periods.
There's a couple of elements to the fund that I wanted to talk about. The first is that it sort of looks to include graduates from the team's small cap ideas, and obviously small cap is sort of a well-known area for ASI in terms of the team and its popularity. It also has a sort of selection of new names. Could you maybe talk us through that and what the split roughly is between the two at the moment?
Sure. So this fund uses an identical investment approach as per all of our other funds run by our team. And that's a proven process that's been unchanged since the 1990s. We have a bottom-up stock picking approach based on the matrix, which is our proprietary in-house screening tool. And that really helps to focus our efforts on researching the companies with the most attractive quality, growth, and momentum characteristics. So if you look at the makeup of the global mid-cap fund, stocks fall into three main buckets. So about 35% is what we call small cap graduates, 33% is what we call leveraged ideas, and 33% is new ideas. So small cap graduates are names that we have held in our small cap funds that have graduated into the mid cap index. So we already know these companies really well. We know the management teams really well. But by owning them in mid-cap, we're able to continue running our winners. So an example of such a stock would be Insulet. This is a US-listed manufacturer of tubeless insulin pumps. We've held it in our global small cap fund for quite some time. It's done extremely well for us. And now we own it in the global mid cap fund as that company is expanding its business model, internationalizing. Leveraged ideas are those that are covered by our global colleagues within ASI that have a high matrix score, so they screen really well, but we benefit from the background work and analysis that they've done. But we make sure that we do our own quality growth momentum overlay to ensure that stock is suitable for our team's process. And finally, new ideas. So these are ideas that have come through on the matrix that score really well, but are not currently covered by anyone else within the company. So all of the analysis is conducted by members of our team on a regional basis. So similar to what they would do for the Global Small Cap Fund.
In the UK, the FTSE 250, which is the index for mid-cap stocks, is currently at an all-time high. Is that the outlier? Maybe talk us through how some of the other geographies are doing and the opportunities there.
Sure. So we've seen that actually there's been a really successful period for small and mid-sized companies. So we've seen coming out of prior downturns and recessions, it's always the small and mid-sized companies that lead that recovery phase. So as a result, we are seeing mid-caps reaching all-time highs in the UK, Europe, US, and emerging markets. The only region where it's a slightly more mixed picture is Asia. And in Asia, it's really mixed because of the fact that there's been renewed COVID outbreaks in some geographies and also some policy normalization in countries like China. But on the whole, on a global basis, markets are really benefiting from the considerable stimulus measures that governments around the globe are implementing and all the various policy measures to really help the economy recover.
We talked a bit there about the sort of attraction of mid-caps at the moment. Maybe, I mean, it would be a bit silly not to have you here and not talk about sort of maybe banging the drum of mid-caps over the longer term. Could you maybe talk us through the attraction of mid-caps sort of versus their smaller or larger peers?
Sure. So global mid-caps is not actually a well-known asset class. And what is a mid-sized company actually varies significantly by geography. So you can imagine a medium-sized company in America is a lot bigger than a medium-sized company in an emerging market like Indonesia, for example. But on the whole, global mid-caps have outperformed their larger peers over the long term. And as of May 2021, they trade at really attractive relative valuations. Global mid-caps are really interesting because the universe is home to a diverse range of global market leaders that operate in areas of structural growth. So we really believe that global mid-caps offer the potential for higher returns than large caps, but with lower levels of risk than small cap. So think about the fact that for companies to have made it from small to mid-cap, they tend to be established, they have resilient business models, but they still have to remain nimble. So mid-caps can offer lower levels of risk than small caps, some of which unfortunately don't succeed or find it difficult to access financing in order to grow. Mid-caps are really entering that next phase of their growth journey. So, for example, they're expanding into different product areas or they're internationalizing their business model. And that can really provide a long runway of growth ahead. But despite all of these attractive characteristics, markets inefficiencies still exist. So mid-caps are often under-researched and undercovered versus their large-cap peers. But these market inefficiencies really present an opportunity for us to find what we call hidden gems. And this is why mid-caps can offer the potential for higher returns than large cap. For us, the Global Mid-Cap Fund is a natural extension of our process. So running our winners is a key principle for us as long-term investors. And one of the great frustrations of being a small cap investor is being forced to sell really good companies just because they've got a bit bigger. Whereas by having a mid-cap fund, we're able to continue to benefit from the positive momentum that these businesses are showing. And by investing in quality companies with really strong balance sheets, defendable competitive advantages that operate in areas of structural growth, we offer a lower risk way of investing in this outperforming asset class.
And just lastly, I wanted to talk about the structure of the fund briefly. And you tend to avoid cyclical areas, the likes of energy, materials, real estate and finance. Obviously, these are all areas that are benefiting from the opening up of economies now in different parts of the world. I mean, does that necessarily mean the fund will struggle? Or maybe just give us a view on that for our viewers here today?
Yeah, sure. So our investment process does lead us to be underweight those very cyclical or speculative sectors. But actually within financials, for example, we tend to be underweight traditional banks, but we do have exposure to diversified financials. So for example, Swiss listed Partners Group, which is a private investment manager, or Chinese in Taiwan, which does SME leasing, or Fineco Bank in Italy, which is more of a brokerage and investing style business. So we do have some exposure within financials. And we also have a number of industrial companies, which we classify as high quality cyclicals. So names like AirTac, which is a Taiwanese listed pneumatic equipment maker, so really benefiting from a long-term trend around the fact that labor is being replaced with automation in China, but also benefiting from this current industry upcycle underway. And also Mizumi Group in Japan, which really makes and sells maintenance, repair, and operating supplies to manufacturers. I have to say, so global equities have gained year to date as investors have been very optimistic that the rollout of the vaccine program will really stem infection rates. Additionally, we've seen huge amount of fiscal stimulus across the world, and monetary policy also remains very supportive. As I mentioned earlier, small and mid-sized companies often lead stock markets in the recovery phase. So year to date, our fund is up strongly in absolute terms, but has lagged behind a strongly rising market because it's those lower quality and highly cyclical stocks that have been bouncing very hard given the prospect of some normalization. But we are long-term investors, so we really question whether these lower quality and highly cyclical stocks that have led the recent market performance will still be growing in years to come, and whether these companies actually have the pricing power or margin cushion to pass on or absorb higher costs. So, investors really need to be careful that they're not left with a portfolio of really poor quality companies that have been bought for the fact that they're cheap rather than their long-term durability. The problem with buying these low quality companies is that share price recovery is only supported by economic recovery. But in the long term, there's no growth in these companies, and that growth is very cyclical rather than structural. So that to us seems like a very risky tactic. And I think the recent crisis has really highlighted the case for prioritizing companies with good quality, strong balance sheets. So those without debt were actually able to continue to invest and grow their business and build market share during this period. And most of our portfolio holdings are continuing to deliver very good results. Management teams have raised their outlook for the year ahead, and they're more cautiously optimistic as well for beyond that period. And I have to say, in recent weeks, we are starting to see early signs of the market beginning to refocus on company fundamentals. So we remain disciplined in our application of our investment process that looks for quality growth and momentum characteristics. And while we are bottom-up fundamental investors, there's a number of themes running through our portfolio which are structural in nature and have only accelerated due to the pandemic. So themes like lifestyle, home as a sanctuary, and digitalization. So the fund is really positioned to benefit from these high conviction, medium to long-term structural themes, while taking advantage of opportunities in high quality names where the economic recovery provides an additional cyclical kicker. So for example, we own a stock called JD Sports in our portfolio, a UK company, which I'm sure lots of people are familiar with. But this is a company that has really strong relationships with brands like Nike and Adidas. So it gets preferential treatment for, pricing and the type of products it can have. Now, it has been impacted by the fact that stores were forced to close during the pandemic. But now as stores are reopening, people have a bit more money in their pockets. This is a company that should trade exceptionally well.
That's great, Anjli. Thank you very much for spending time with us today.
No problem. Thank you for having me.
And for more information on the ASA Global Midcap Fund, please visit FundCalibre.com.